All right. Good morning, everybody, and welcome. It's TheoTrade Chat. It's Don Kaufman here. It is pretty much towards the end of March, which is also coincides with it's the end of the quarter. What does that bring us? A bit of a rally this morning. So I say a bit of a rally, but holy crap, off the lows. Don't worry. It's only been 121 point range. You got that going for you. Look at that. We kind of spiked up over here and some big volume in the overnight trade. Can I tell you something though, right off the bat? So I know there's only 2 minutes to go to the cash open over here. Don't you worry about a thing. One of the first things that really grabs my attention this morning is not the rally. It's when you start looking at individual products. All right, listen, you got me on the financials. The financials, they're definitely big to the upside. Apple, okay, is not really even up, but maybe $1. Google here, okay, nominal move. Microsoft, it's catching a little bit of a bid, but that's had the living crap beaten out of it. $2 on Amazon, Tesla, nominal move on Tesla. I'm glad I didn't trade that one. Meta's got a decent bid. I mean, Meta, though, has also had the crap beaten out of it, like Microsoft. You got nothing out of Nvidia, and Broadcom, okay, is literally unchanged. So you want to get all hopped up, because we're rallying right now. You better read real quick. Tech is not rallying on a percentage basis. Tech is not with the S&Ps. There's one of two ways to look at this. The S&Ps continue to rally. Tech could actually come to life. We could easily be up 120 points today, easily. So I'm just going to point out again, in the pre-market, what is not participating, okay, to literally any extent really here happens to be big tech. It's all like energy, and energy rallying is not a good thing. It's energy, it's financials, everything else. They're not hurting the marketplace, but they're also really not helping. We're going to come to today's cash open. It's pretty high correlation here out of the gate. Raging strong ticks. Let's come to this morning's bell. So out of the gate, as I was saying, full-blown correlation, okay, as to be expected on this, and it's like one of the first times. Look, you're actually seeing energy up, but everything else up. Then we talk about ticks. If we bring up Quantix really quick, look at this. They fixed it. They fixed it, people. You know what's funny is they fixed it, but they didn't. Never mind. Positive almost 1,300 in ticks, which is again the equivalence of raging strong. So out of the gate this morning, again, I want to just really expand upon what I was just talking about for a few moments in pre-market. Just take a look right there. Forget about even looking, okay, at a point for point basis. Who cares? Stop looking at that. Why do you even need that? Okay. Trying to digest, we're up 54 points, okay, is ridiculous. You got to digest right here on a percentage basis, because if tech isn't the driving force, what is? Okay, and there's an answer for that. There's nothing. If tech is not the driving force, then you're in trouble to some degree. And that is exactly my point out of the gate, this morning is, okay, I'm not bearish today, not bearish, okay, but you need at some point here this morning, and I'm not talking about in an hour or two, like right now, you got about 30 minutes. In that 30 minutes, if tech doesn't start to really catch a bid, okay, you're going to start to get pulled back a little bit. This, okay, it's clearly a rally, and it's a rally off the lows. But it's not anywhere near the recovery that you should see. And this is definitely not at this point a quintessential rip your face off rally. Very, very important. Like when I talk about, like the quintessential rip your face off rally, in the midst, okay, of a down move, some of the hallmark, if you will, and some of the most violent moves in the hallmark of volatility is a rip. And I mean a rip, like getting to like 6,600 and doing it like in one day. You're like, you're crazy, man. It's another 140 points. Why not? Okay. Some of the largest percentage moves that have ever been seen, okay, in the middle of down markets, in the middle of volatility, have actually been the rips to the upside. You know as well as I do, a lot of people are short. And what's going to happen is the moment we really start to project back to the upside, okay, those shorts are going to cover. And then, okay, you actually get monkeys thinking it's a bottom. And then they start to come in there and buy. And, okay, the one thing that's evident right now, okay, is you have absolutely no clue how this day is going to end or, okay, where you're going to be tomorrow. And that's the little chip on your shoulder that you better get away from immediately. Okay, you have no idea how this is going to end up even today, because I can tell you right now, just looking at big tech, you have no idea how this is going to end up. In fact, you're not even sure if we're going to hold together for the next 30 minutes, because like Apple, just went flat on the day. By the way, I'm waiting for you, Apple. Oh, I'm waiting for you. Who has the bearish fly on Apple? Who has the bearish fly on Apple? I do. I'm pretty far away from it still. It's like $3.50 away, but okay, I'm waiting on you, Apple. I mean, because Apple, like, again, overall, what's Apple done for me lately? Nothing. It hasn't really sold off either, like the rest of the marketplace. So I figured if the market is going to get clobbered today, that we come after Apple. It's not exactly selling off though. On the other side though, okay, I actually have the bullish fly in Meta, and Meta is doing crap right now. Okay, I'm a little disappointed, okay, in some tech performance, but as I said a moment ago, it's too early. Okay, and this is like just kind of how volatility works. You have to let the days mature, and we'll take sensible, reasonable positions, okay, throughout the course of the day. Remember, you just kind of want to pick off what I term like low hanging fruit. Like if we have a solid pullback here, ironically enough, we might be able to even get bullish on the trading day, okay, in one of these products. Like maybe we take a bullish shot, assuming that the skew is not too bad. But before we do that, you just got to get a better feel for what this is going to look like. And quite frankly, like, how much do you trust a marketplace where, like, look, there's volatility. If I just forget about VIX for a second, screw it. Like, we'll even pull up the VIX. Okay. For those of you that are, I'm a VIX person. Okay. I'm sorry about that. But, okay, even if I pull VIX, does that look like we're in the middle of a rip your face off rally? Okay. Does that justify anything that says, damn, I need to get out there, I need to buy today, okay? Or I need to even cover my shorts, all right? I mean, and I'm not trying to be facetious, I'm deadly serious here. Does that look like volatility is being crushed, okay? Because it's down 3%, but still my heart, all right? Look at the volatility futures. They were basically at highs. Just a few hours ago, they were at highs, okay? And now they're picking back up. Doesn't exactly scream like, this is it, baby, this is it. It's a very, like, just in the last, 6 minutes, right? In just the last 6 minutes, again, I'm not necessarily bearish at all today. I really think, like, we're way overdue for a rip your face off rally. Like, look at that. You haven't had, okay, a bid back here to save yourself. And the bid back that we did get right here, okay, was faded hard into the close. That was a huge move to 67.50 that actually faded into the close. Here, okay, it's not similar, but we're sinking right now. That's why I said, okay, 6 minutes ago, I said, you're not going to be able to figure out where we're going to be even closing today, much less tomorrow. And there's nothing wrong with that, okay? Knowing that you're not in the driver's seat when it comes to directional bias. Order flow is, okay? But you can take some great trades in and around that. And that's all we plan to do. Kind of hard to have a rip your face off rally when Nvidia is now underwater on the day. Nvidia is now flat, okay? Apple is down $1. Again, it is not nearly the rosy picture that we had we had maybe some of you hoped for. I don't know, by the way, I don't ever hope for like a rosy picture. Okay. I was looking at the S&Ps yesterday when they reopened. They're like, they're down 40. We're going for it. Come on. Everybody likes to see a little bit of a train wreck once in a while. Okay. I like it. I like the train wrecks. Okay. And not necessarily because we're descending. It's just, I like a lot of volatility because you don't even have to be like good or right. You just have to be there. You know, if people would just get that in their head of like with volatility, okay, you can suck one day, you're the greatest the next. Okay. In Microsoft, I'm sucking a lot of wind in here. Look at this thing. Okay. I put a bullish position on in here. Okay. So I'm not counted out yet. Okay. It ain't over yet. Huh? It ain't over yet. I have 11 days and a $17 expected move. Kind of like my odds. Anyway, there's we're kind of far out of the money. This is a spread that I had put on, looking again for kind of a rip your face off rally, and we could be dead meat on this one. Whatever, it's a $17 expected move, which only gets me back to like 377. But we're going to see how this one plays out. Again, you'd have to be all the way back to 385, and that does not look like a bounce to here. Okay, does not look unreasonable at all. It doesn't look unreasonable. What's becoming unreasonable, right, is definitely looks like everybody's just selling into any bounce they can possibly get. So I want to, for a moment, everybody good? Everybody good? Holy crap, that's pretty good. Pretty good. Oh, Apple's getting a little closer. Okay. I don't know if this one's going to come home today. What I'm continually looking at, Superfly. It's Superfly, damn it. Okay, and I like it. So I have a butterfly. The core of my butterfly, the body of my fly, is sitting at 240. That's a $7 move. That's probably not going to happen. But there's still a $3 expected move today. And a $3 expected move today would definitely bring me home, you know, right under that 245. But on the flip side, okay, I also have a positive meta butterfly. So I'm well positioned on either side. And I am still, okay, relatively undecided on today. The Russell, okay, has actually decided something though for us. It has now gone to massively unchanged. As I said, you're 10 minutes into a trading session, okay, where's your rally now, big guy? All right, there isn't one. Moreover, the volatility is really rocking this morning. Like, holy crap, that thing came soaring back. That doesn't look like a big move. That's a big move. That's a very big move in volatility in a very short period of time, but there's vol buyers. I'm not completely convinced that we're just gonna, you know, sink back into the abyss, but we're gonna have to kind of take it, you know, almost minute by minute in here. It is also notable the VVIX, which was collapsed back down a little bit this morning, is almost at its highs. Okay, I mean, there's some pretty wild moves, okay, in the first 10 minutes of trade over here, and you just, I mean, look, I don't mind saying, okay, look, what happened so far today? The bell went off, we went down. There's no time to trade in here. Okay, don't be delusional. If you actually are trading in this, you're kind of chasing. I'm not saying that you're not making money, but that's not a good habit to get into. I think some people understand, like bell goes off like right here, boom, we're straight down. Before, okay, you could really make any decisive moves, we've already seen some sell side activity. The rally got basically cut in half, yada, yada, yada. Okay, nothing to see here just yet. But, okay, again, I'm not totally sold. As I said to you, in the pre-market, you could see that tech was not strong. But when I say I'm not totally sold, I'm not necessarily sold, okay, that we're bearish. I'm not. You know, from here, if we're down 25, you got me. If we're down 25 in the next hour, okay, crap's going to get real, and they're going to cross right through lows. That much I can tell you, but again, I'm not entirely convinced. And moreover, when you're shopping trades for an intraday, okay, when I say intraday, I'm talking about today, but if you're shopping trades intraday, IWM could actually be interesting. IWM, like a 0 DTE, like call in here, okay? These are, holy crap, there's a lot of volatility in there. 55. I haven't traded IWM that much. Okay. It didn't wrong me. It didn't do anything. Okay. You've wronged me. Oh man, I hate to buy at the monies with this kind of risk on the table. And I'll just buy one and see how. Okay. So I'll pop that in chat too. What did I pay? 131. So I just bought a 243 call in the IWM, looking for the possibility of kind of a big reflexive bounce back. As I said to you, I'm not sold on the idea that we're just going to sell off into the abyss. If we are, okay, I'm very forthright in saying $1.31 at risk ain't half bad. But this is zero DTE at its best. You're looking at the screen, and by the way, I'm putting the trade. I already put the trade on, and now I'm going to actually tell you why I put the trade on. Okay, so what made me buy a call? Okay, because let's actually back away for a second. What made me buy a call? Okay, what made me possibly bullish on a trading session? First of all, you only have $131 at risk. And again, I'm playing like onesie twosie in here because I know I've got a lot of people following. And the one thing that I've actually learned, and again, forgive me for saying this, but the one thing I've learned over the years, if I come in here and I trade a 10 lot or a 100 lot or whatever, it is more apt to get you to actually trade size. I don't want you to trade size. I want you to be capped in one lot. Okay. Until you're really comfortable with the types of trades that I do, be capped in one lot. Like you don't have to follow and follow big. So I am constantly going to trade, usually in front of people in the lowest common denominator. It's going to be rare, like, that you see me put on any real size. And I try to off in in the sides over here. But let me explain then why. Why did I actually buy a zero DTE, okay, which this absolutely is. Today is March 30th. This expires on the 30th. Why the Russell? To begin with, okay, Russell, NASDAQ. NASDAQ is actually kind of the weaker of the majors. The majors being the S&Ps and the NASDAQ. But the Russell was kind of a real standout. And I'm going to tell you why it's a standout. The one thing that didn't change this morning, and I haven't even brought up, okay, is if you take a look kind of from the bell this morning, the S&Ps, this being like the bell, the S&Ps really sold off. And the bonds, though, barely moved. So it kind of tells me, all right, the move is definitely prevalent in the S&Ps, and the move that we're seeing is definitely prevalent, okay, in the S&Ps and the NASDAQ. But I'm not convinced that that move is going to be prevalent, and kind of resonate in the entire marketplace. I also noticed that the financials haven't really backed off or done anything. They're still up 1%. And although I realize that tech can definitely pull the market down, okay, I'm thinking over here that the Russell, okay, it's got a lot of, mid cap kind of financials. The Russell, okay, it's a pretty good shot at kind of holding its own. So I think it's worth some of the risk, okay, in early trade here to take, if you will, that kind of bounce position. And we'll see how it actually plays out. I mean, look, 16 cents isn't worth, anything in here, but on a percentage basis, like these options move really, really fast. And I'll be relatively conservative, okay, in here. Okay? I don't, like, people constantly ask me like, what kind of stop orders. I wouldn't prototypically use any type of stop order, okay, nothing like that. If I'm going to take a loss here, it could very well be, a $1.30-ish kind of loss. Or if we sell off violently, and I want to show you something right now, we are selling off again violently in the S&Ps, okay? That's violently in the S&Ps. And interestingly enough, like I don't feel the Russell, okay, kind of breaking some of those lows. So for today, I'm more comfortable inside of the Russell than I am the S&Ps, because what I don't and I don't mind saying I have no feel right now. NASDAQ, okay, this thing can't get off the mat. It just keeps getting sucked back in. I mean, they're coming for Apple right now too. Like that's not good. That's not good for the S&Ps at all. I'm almost taken back by like, holy crap, Broadcom, really? Okay, Broadcom is starting to get into levels. Look at this. You have to open up like a 3-year chart. Okay, you lose 300. Okay, you're easy 250. Like forget about like when you're in the midst of volatility, forget about like let me apply my 618 over here. Okay. You got to stop with that and understand, okay? Big round levels. Okay. I'm talking about levels. Like if it looks like 250, sure as hell, it's probably 250. Don't waste any time, okay, on like perfection or specifics. This is volatility. Nobody gives a damn. And like literally, okay, volatility is like some wild animal that you've accidentally cornered and it's pissed off. That's the best, interpretation of like volatility, okay, that you can have. And I think everybody's actually probably experienced that at least a couple times in their life. You're like, I accidentally cornered, okay, a wild animal and I have pissed it off. No, nobody, okay, nobody here's willing to admit that. Yeah, no, right, okay. You guys haven't pissed off a couple of animals out there? By the way, I try to corner them and piss them off. It's a hobby, okay. Uh, and yes, definitely married. Okay, I've learned though very early on, you don't corner her. Okay, the wrath of that. Okay, I have a 16-year-old girl too, and that's clearly not only isn't it better, it's like next generation. Holy crap. Yeah, a couple of girlfriends pissed off over there. It's just getting good. It's getting good. Okay. The possum in my pump house. Okay. I'm not exactly sure what the hell that means, but all right. I don't really have a pump house. Okay. If I did, I wanna think that that's like, your pool pump. Okay. Which by the way, I've actually found huge desert rats. They like to sleep next to the warmth of the pool pump. Huge, I tell you. I learned that one early on. Okay. All right, continuing on. It's going downhill here, like in a hurry. But I'll take a quick, shot at a 0 DTE early on. Okay, honestly not having a great feel for some of the order flow, and there's once in a while where like, look, in 0 DTE, okay, it's fast over here. There is no bearish position to take in here right now. There's not. Okay. Like if you were going to take, honestly, if you wanted to take a bearish position, the only place this morning might have been maybe financials because you can't hop on a freight train moving that fast. Because if you do, you're what we term shorting into the hole and then you get your head popped off. That's a very bad habit to get into in trading, getting your head popped off, in the midst of the rally. The energy sector, okay, is exploding to new highs. And it's worth me. I just want to take a second because I like to look at statistical norms and statistical abnormalities. And here's one where you start to say this is a statistical abnormality, but it's not. It's not a statistical abnormality. If you take a quick glance, so we hit the upper edge of an expected move here. Here we didn't. Here we hit the edge of an expected move. Here we actually broke the edge of an expected move. This is definitely a bullish, okay, indication, but I'm actually really surprised, okay? And again, I really am surprised how well energy has kind of held it together. I mean, on a year-to-date basis, look, it's up almost 40%. You have to say that and go, holy crap. But what's weird is that energy was already up 20% before, okay, there was really any conflict. Okay, conflict's been going on like a month. So the initial jump in here, okay, great. It was already up 20%. I just wanted to throw that out. And the reason I'm throwing that out there, okay, for all to see, okay, because I am so damn sick of everybody's like, somebody knew something. You're damn right somebody knew something, okay? I want to point something out. Since the beginning of the year, okay, ships were moving literally from like places like Venezuela, okay, into the Middle East, preparing for the possibility of a 20% rally inside of energy. Just wanted to throw that out because I get at least 2 or 3 emails every day. They're like, somebody knew something. Okay, of course they did. Everybody knew. Now, I've also had a couple of emails. They're like, before Trump's tweets, they knew, and then that's why they're tweeting about it. Okay, but if they did, wouldn't you see the volume? Wouldn't you see the size? Okay, don't you think the Chicago Mercantile Exchange could actually pick that account out in about 2 seconds? So if anybody's trading on any of this information, because I do, I get a lot of that, feedback. If anybody's trading the information, okay, it would only take them minutes to be able to track those accounts of any real size. Like, could you trade this information and get away with maybe doing like 100 contracts in the S&Ps? 100 contracts? Yeah, absolutely. But would you trade on information that was non-public for 100 contracts in the S&Ps? Okay, what are you going to make? A few 100,000? Okay, and risk going to federal beep prison. It's good stuff. But the point being is anything in the marketplace, okay, it's pretty transparent, you know, and I'm sure that there are definitely people in Congress that have had information, okay, but I'm actually going to give you another take entirely, okay, because everybody wants to rip like on the politicians. So I have looked at that data extensively, okay, and you can always point out, you're like, but Nancy Pelosi, okay, yes, but actually if you looked at the entire spectrum of individuals, okay, holding any type of congressional, whether it was Senate, okay, or representatives. The truth is, it fits into a perfect, like, it's a distribution curve. Okay, it literally is a distribution curve, and social media just picks on the ones that actually made a lot of money. But you'd be amazed. Some of them got their asses handed to them, okay, in Congress, and it actually shows you the spectrum of, I mean, basically everybody and all the participants in there. I think you guys you'd find that interesting. In fact, I'll have to bring it up some point where it's literally everybody, okay, that holds a congressional seat, and they're trading, they're reportable trading, which they have to report everything that they are doing, and it's not good. It's not good at all. It looks like any other retail trading. By the way, a few of them, okay, that's not trading. That was actually private equity. So there was one that somebody's commenting on, okay, it's totally different. That was not trading, okay. Gave capital to like a small family office, and that family office did something. That's there you go, okay. That's the one that should end up possibly in prison, but that's totally not my thing, okay. But that wasn't trading. Those were not trades. We are now negative on the NASDAQ. Holy crap, okay. Can't get off the mat. So let me bring up Apple for a second. There's been no further decline really inside of Apple, okay. Nvidia is kind of going for it along with Broadcom. Now, need I remind everybody, if you've actually been sitting here the last couple of weeks, I keep talking about how Nvidia is relatively unscathed. Coming much below this level, it would be scathed. Below this level, things start to get interesting. Very interesting because, as I said, big round numbers. Do you guys remember months ago, I asked you, would you buy Nvidia at 140? Okay, right now is a great time. Would you buy Nvidia at 140? Just a yes or no. Y for yes, N for no. Okay, the reason, furball, the reason I'm bringing this up, okay, I always like to show you as circumstances change in markets, okay, as circumstances change in markets, okay, you're far less apt to want to jump out there. And if it got to 140, it's very interesting how all of a sudden it was like, by the way, the last time that I asked this question, this stock was closer to 200. It was towards the upper edge of the channel. It was closer to 200. Now it's closer to that 140. It's in that 160 range. And it's about a 50-50 market. I like that. Somebody said I'd buy it at 90. Okay. I don't know. Then the question is, how long did it take to get to 90 and what were the circumstances behind it? Because right now, if you're looking at this, 140, it's not that far away. Okay, you're like, yes, it is, really? Okay, really? because it's 26 points away. You want to see 26 points? Let's come down to it. You want to see what 26 points looks like? Okay. That's just over a month of trade. Okay. You're within striking distance from an expected move point of view. You're within striking distance of the 140. Okay. And if the circumstances in the economy start to shift, right? That's why I constantly ask this question, because people make up their minds. They're like, oh, screw you, man. I'm totally buying it at 140. Okay. You first. Your mind can easily, okay, be swayed. All of a sudden, the economic conditions change and Nvidia starts to throw in the towel. Or, okay, let me give you another one entirely. What happens if Nvidia turns into a moo? Okay, moo, which had a huge rally this morning, is getting absolutely annihilated. Why is it getting annihilated? Google's new algorithm, okay, makes RAM memory. It's far less in need. It's not like saying like, oh, you don't need RAM memory anymore, but Google's new algorithm, okay, has really lessened the need. It's for, again, some of the short-term memory. So what do we have over here? What if Google actually develops an algorithm just to screw Nvidia? You think they're not trying to do that right now? Trying to do everything possible to screw Nvidia. It changes, okay? Markets change very, very quickly. The lesson in this one is a very simple one. Conditions of markets, okay, as they change, right? You don't pin price, hopes, and dreams on any one underlying. You got to treat this like, who cares what NVDA even is, okay? In this business, you've got trading and you've got investing. And, you know, I've always heard over the years, like, invest in something you love, invest in something like this, okay? There's plenty of things in this world that I have loved, okay, that have gone to absolute crap. Talking about companies. Talking about companies, okay? I had a dog and he was kind of mean, but you know, other than that, no, there's lots of things that you love and just absolutely go to crap. And the one thing I've also kind of learned over the years is, okay, I don't have those love for stocks, okay? You know, there might be a company I absolutely love and still not holding the positions for a substantiated period of time. By the way, look at Caterpillar too today. This is getting interesting, right? That one's getting absolutely smoked. By the way, the Russell, okay, that's not gonna work here anymore. It's not over by any stretch of the imagination. This Russell position is not over. This thing could rip from here. Very, very difficult to justify anything. The volatility is definitely taken off to the upside, but we're not positive yet in vol land. But the S&Ps now, okay, are now massively unchanged. We're right back, okay, to where we were from Friday's close. So again, very, very expansive ranges in here. So let's talk about positioning for just a moment, okay? And I'm going to bring up some topics. All right, positioning, a few topics in here. Hang on with me. Okay, first thing, okay? First things first. You have, okay, sorry, I'm reading back over here. All right, we're easy, everybody, okay? All right. Oh, man. By the way, don't believe the social media and TikTok videos and anything. Okay, where do you get your news? TikTok? Okay. Oh, so, okay. Sorry, I'm cracking up. There's a comment in there about TikTok. Okay. Like my kids, you get your news from TikTok. You should hear the crap. My daughter asks me once in a while, is this true? I'm like, I don't know, ask Grok. Everybody's like asking Grok if it's true. Grok's like, are you that stupid? Like AI is literally asking people, are you that stupid? Like seriously, you should not be using AI. Okay, stop getting your news from TikTok, which may or may not be influenced by the the Chinese regime, shall we call it? By the way, I saw another news blurb this morning, and it was regarding the administration is in negotiations with another regime for Iran. Okay, does the present regime actually agree with this? Probably not. Oh, there's going to be regime change. Who's going to do that? Huh? Okay, who's changing that one? I just that was my only question from that press release this morning. By the way, that press release this morning, okay, was right here. Okay, there was a tweet this morning, and it was right here. And the initial thing is it like spiked the markets. Everybody's like, "Are you out of your mind? Like who's going to do that?" Okay, I don't know. I'm up for it. I want to see. Okay, kind of want to see how this is going to play out. Again, I am by no means this morning bearish on markets. Okay, very open to two-sided trade. Two-sided trade is going to continue to kind of resonate. There's already a little bit of a bounce in here in the Russells. There's bounce in the S&Ps, but take a look. The financials, okay, have recovered pretty much to their opening rotation. It's not, okay, per se a bearish tape, but it's really, really hard to have a rip and rally when you have Nvidia and Broadcom and Apple down. Three of your products are actually down in the day. It's very, very difficult at that point. Okay, this is a lead weight around the market's neck. Okay, let's come back in and talk a little bit about expected moves, some of the trades, and what to expect this week. The first thing. The expected move from last week was $188. Okay, this week, that's a pretty staggeringly large number. So it's $195. Now, why is the expected move so big on the week? And the answer to that is it's quite simple. The expected move is huge because, okay, there was a vicious sell-off late on Friday. I mean, Friday, okay, like that was the most vicious sell-off I think we've seen yet. Little respect for the marketplace. In the last, couple hours of trade of the day, you're trading 64.40, okay, and closed. I mean, it actually, the low was 63.56, almost a 100-point decline in a few hours. But literally from this point here, 64.20, okay, on down, that got real. I mean, you had some real sell side activity kind of pumping through. Now, the market effectively closed at about 63.70, okay? And because of all that volatility, it gave us this really expansive, huge, okay? And it is huge, 195-point move. What is a little bit unique, and again, this previous week right here, okay, this previous week was 188 points. This one is 195. I can't do a 5. I can't. My hand is all screwed up. Okay. This is a 195-point move. So the reason I'm like really spending some time on this, okay, and I am really spending some time on this, and I want to spend some time. There's only been 1 week this year where we've cracked expected move at the end of the week. Okay. And people, I find that absolutely staggering. Look at this crap, okay? This one inside. I know it cracked outside, but it closed basically unchanged. Okay, look at this, unchanged. Here's one lower edge, but okay, every one of these weeks, okay, is inside the expected move. And now we pump to a $195 move, okay? Forgive me for saying this, okay, people, the crap is going to hit the fan. It's too efficient, okay? What do you mean? What can be too efficient? Crap is going to hit the fan. It could very well be to the upside. You want to see a rip your face off rally? What if you had a 230, 240 point move, taking us all the way back, even to like 6,700? Totally plausible, okay? Completely and totally plausible this week. And what leads me to believe that, okay? You don't have to look very far here, okay, to kind of recognize when you've got implied volatility, okay, way overpricing like actual moves, okay, it's a recipe for disaster, because what this is going to do, this is going to draw out more and more premium sellers, okay? Forgive me for saying this, but I know that premium sellers made money. Like if you sold premium in the S&Ps, non-directional, okay? But if you sold premium and you're a market making firm and you did something non-directional, okay, over the last 12 weeks, you made money, period. You made money. Everything fell within the standard deviation. Everything that you did fell within the standard deviation. So you made money. This is where it's just basically you just get, stretch and finally something snaps, because here you're going to have a lot more premium sales. I don't trust this thing as far as you can throw it. I really don't. Okay. You're going to get a humongous outsized move when this starts to, it's like a rubber band that's just, okay, it's completely contracted and it's about to get snapped and pulled. Be extraordinarily careful. I would not, even if you are going to sell premium, rule of thumb right now, don't do it naked. Okay. Don't get caught naked short because you literally and figuratively be getting caught with your pants down at this point, no matter how big you think that volatility happens to be. Okay. When we're not crossing the expected move at the end of the week, you got yourself problems. Okay. It's a real dangerous marketplace. Okay. Somebody was saying it feels dangerous to sell iron condors. Iron condors can make money as one-offs, but if you do them consistently, are guaranteed now to lose money. There is no statistical edge in trading iron condors anymore, especially in the SPX. There's zero. And I know there's a lot of websites like dedicated to it. Basically, the plight of the iron condor trader, you make money 9 times in a row, and the 10th time you lose it all. That's what happens to everybody that's going to trade an iron condor right now. It's statistically impossible in the SPX to make money. No matter how good your management skills are, you're not going to make money, especially in weeklies. You will not make money in the SPX iron condors. The skew is such that even selling a put spread doesn't even make sense. So just be careful with it because I've seen tons of studies done on that, a lot of white papers on it. Again, I reiterate, okay, the financials have a bid under them. It's solid. The energy sector has a bid under it. It is solid. Those two are enough to keep these S&Ps from falling out of bed, right? The financials are enough with the energy sector. It'll keep the S&Ps falling out of bed. There's no question. There's a hell of a lot more pressure into some of the tech stocks than maybe we would have expected. Okay, well, we'll see how it goes. But I'm also going to reiterate the bonds have been completely stable. The stability in the bonds leads me to believe that the marketplace is okay with the rally and it's going to let this thing fly. Meanwhile, oil, okay, if we closed here, it's closing high. All right. I think I saw in Polymarket last night, one of the prediction markets was what's the probability of oil being at 200 in the next couple of months? It was a 30% chance. That's freaking awesome. You know what though? It was weird because I don't know if that was Brent. Okay. I think that was Brent. All right. Damn, that's good. Okay. It's good stuff. Okay. Yeah, everybody kind of learns those iron condors. They work until they don't. Okay. I guess some people just have to like kind of trade it themselves to understand that. Like it looks really good. Come on, we're supposed to take this and just bring it right back up to here. Like that looks like a pretty good chart. Okay, I would believe that one. All right, onward and upward. So we're in the Russell, okay, in the IWM. We're just pennies away from where we entered into this position. Okay, 15 cents off where I entered the position. So we're in okay shape though. We'll see if this marketplace, as I said, it's not going to be a one-sided market today, selling off into the oblivion, although it's possible, okay, it's not necessarily like plausible. And I'm shopping a couple of new trades today too. I'll let you know as the day kind of wears on. So let's go down the list of the usual suspects again. The expected move for today is $110, okay? But to reiterate, this is a 4-day trading week. People, okay, we are closed on Friday for Good Friday. And one of my kids has off school and the other two don't, which really sucks, okay? Because I would like to leave on Friday, but I can't because I got 2 damn kids in school on Good Friday because their school didn't give them off, okay? It's very confusing. But it is a 4-day trading week. And with the 4-day trading week, strangely enough, take a look. There's a Monday, okay, a Wednesday, and a Thursday expiration. So Monday today, Wednesday, and Thursday. And yes, this is Apple. Okay, so the equities are showing you 0 DTE. Okay, and this is going to change up Superfly a little bit this week because we're going to be able to trade Superfly. Obviously, I have a trade on for today. Okay, the trade for today. I'll have a trade on for on Tuesday for Wednesday, and then on Wednesday we'll be trading Thursday. So Superfly, here we go. Meanwhile, back in Meta, okay, that little bastard won't rally. It just needs to go up like, another percent or so, okay, very likely. Again, not discounting the ability to have an explosive rally. People, you have a $110 expected move today. The first thing you should say with a $110 expected move, I can expect anything and everything. All right, onward. XLU spread. Let's talk about a trade that I just put together. Okay, in the XLU, first of all, the XLU, okay, I am kind of surprised about this because it's up 1% today. I definitely took in this trade, okay, a bearish position. And everybody, you should know that you now have the ability to get into this. It was a trade that I put on, and what happened as soon as I put the trade on, the market's kind of faded a little bit. So a lot of people did not get the fill. So it's okay if you still want the position, and this is true of a lot of trades. If you still want the position, you don't have to fight the damn market. Just come in here, create duplicate order. Okay, look, you're going to be able to get it for like 2 cents less than everybody else. Okay, you should see scores. So I was probing markets 94, 93, 93, 91, 91, 89. Okay, a lot of different fills in here, but I'm comfortable. I have 32 days left. There's 21 vol. What am I looking for in XLU? Okay, the bottom line of XLU, like look at the volatility in here. I kind of expected that if the market rallied, that XLU might actually sell off a little bit. But overall, here's my real thinking in this trade, okay? XLU is everywhere. All it needs to do is dip down here for a little bit. I think it can get there, okay? I'm not overthinking. Like XLU is a perfect example. Just it's an absolutely perfect example of, okay, we're in volatility. Okay, I can't justify, like, what am I going to justify in here in directional bias? Well, sometimes we're down here and then we're up here and then we go up here, but then we go back down here. Like, you can't justify anything directionally in there, nothing. But again, if you want the trade, you need to be down, okay, in like the 44.5, 44 level for full profitability in just the next couple of weeks. So literally, if it hits the lower edge of the expected move today, okay, you're there, you're home, you're golden. Okay, it's good stuff. We'll see how that one plays out. Questions, comments? Okay. Copy the trade. It's down there. What are you guys talking about? Just scroll down, man. You should never, ever, ever have to ask for a trade. You got to know where the trades are. Okay. Look, where's my trade? It's right here. There it is. Okay. There it is. There's the trade. Okay. There's the trade. And I want to make sure that everybody knows that's one I sent out. And if I send it out, it's always in there. Okay. I guess, you know what? Some people like this format though. If you like that format here, okay, that I can definitely put in there. Now you can just copy and paste it if that's what you're looking for. All right. Okay. All right. I copy and paste the damn trade. Okay. Don's getting angry. All right. Let's continue on. And you can see like we only had I knew that only a handful of people filled this one because I can look. There wasn't much. There's plenty of volume in here, but there wasn't much open interest in this strike. And I can see we only filled 400. Normally, when we do a trade, okay, it's 1,500, 3,000, maybe even 4,000 contracts per strike. So right here, you could argue that we're only like maybe, 20 or 30% of our normal volume. So if you are in here and you want to do the trade, great. If you don't, that's okay too. I just showing everybody that there's plenty of time to get filled. And that was kind of a quintessential in-out spread. All right, onward from there. For those of you trading Christmas trees, if you're trading Christmas trees, I'm going to shoot a quick video this morning and send it to you on Christmas trees. Okay, the Christmas tree is, I'll spend 2 minutes on it though. because it's really worthwhile for everybody. Okay, the Christmas tree that I presently have on. Okay, one of the comments I got, you're like, you're down money. Okay, am I? Am I really? Hold on. Am I down right now? Okay, the answer is yes. All right, I have lost. Oops, sorry, I got an extra trade in there. Okay, on the Christmas tree that I presently have on, am I down money? Okay, yeah, like the Christmas tree is down almost 50%. But you also have to understand, okay, that in the Christmas tree spread, the best place you could be is right here. Here being, let's actually draw a line and let's get very specific. Okay, here being somewhere, okay, just below the 600 level, and that would be the most pivotal spot for the marketplace. We are in a very, very good place right now, but this Christmas tree still has 80 days left. Okay, and when the Christmas tree has a lot of time left and the markets are selling off, you may have to wait till very close to expiration, like 80 days. But if you waited 80 days, you might be able to make as much as 8 to 10 grand on here. But I'm going to tell you something. For those of you that are in a Christmas tree spread, we're going to find out. Okay, this is where you don't bail. This is where you actually have excitement. This is the first excitement we've had in Christmas tree spreads since all the way to like last year. Okay, anybody that was in Christmas tree spreads last April, okay, raise your hand. Okay, did you panic? You're like, I panicked. Did you wet yourself? I wet myself. Okay, did you wear a diaper for like about a week? You're like, I definitely did. Okay, how did it come out? And I was like, spectacularly. All right, it's scary sometimes because you're kind of playing chicken with the market because you realize if we get all the way down to 530, you're like, 530? That's a ridiculous number. 530? Are you out of your mind? Okay, you're at 630 right now. It's a 100-point decline. Could it happen? It could happen. I've seen it happen. It happened last year. Okay, and then we just bounced. You know, it is what it is. But whatever. Look, I like bringing up the Christmas tree, which again, I'm going to shoot a full video on this. Okay, right here, we're like, I can't handle it anymore. Can't handle it. That's the best place to be. Okay, this is what we train for, people. This is what we train for. The Christmas tree is like one of the more wild positions because you can be positive delta, okay, negative delta, or somewhere in between. Right now, we're slightly positive delta, meaning like go up, go up. But if you just left the position here for a couple more weeks, the delta will actually flip over to go negative and be like, go down, okay? Oh, yes, 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 it's Mr. Toad's wild ride, and I like it. Okay, continuing, okay? Yeah, I can use the MES. There's no difference between MES, okay, and spiders. By the way, I have the MES position on, okay? This is your Christmas tree, okay? Welcome to Christmas. This is another Christmas tree that I have on using the MES. It's 1 by 3 by 4 by 5 in the MES because everybody says I can't do the trade with my margin. Yes, you can, okay? You name a trade, I'll figure out a way to do it. Name me that trade and I'll figure out a better way to do it, okay? Man, this advanced decline line now, it doesn't feel exactly so rosy. Hold on, I got other crap I got to cover today. So XLU, we're good to go in there. It's pretty much unchanged. Microsoft, okay? Microsoft has a meager rally going on. We just need another 25 points in the next 10 days. IBIT, okay? IBIT. So here's one where crypto is rallying a little bit today. Crypto, okay? The crypto monkeys. So forgive me for a second. I have to go on a tangent just for like 2 minutes, okay? If one more person sends me an article, Michael Saylor is going to save the world, okay? The guy is possibly a sociopath, but that's just conjecture. That's whatever, okay? I want, no matter how much capital is behind this individual, okay? He has no chance whatsoever of either cornering or saving a marketplace, period. This marketplace is way too deep. You know, people talk about like, well, he's going to have a couple of $1 billion. You realize that's a drop in the bucket. A few $1 billion. Are you crazy here? Okay, look, this is Bitcoin futures, and I'm showing you Bitcoin futures for a reason. In Bitcoin futures, okay, the margin of one futures contract, okay, is $131,000, okay, which is evidently a fairly large number. It's kind of crazy because this is worth like almost like 5 Bitcoin in here. This is an absolutely huge trade, but I want to show you, okay, there's only like 10,000 in trading a day, or there's only 8,000. Yeah, but that's like 8,000 times the equivalency of like 5 Bitcoins. This market is freaking huge. Okay. I just can't stress enough when people start talking about, Bitcoin and one firm, okay, that has a bid under it, and that one firm, okay, what they're basically doing is they're leveraging their stock position, they're leveraging debt, okay, everything possible to go out, and they'll sell more stock, dilute their stock. And that's one of the things they just recently did. They're diluting their stock, so they're selling stock to turn around and buy more Bitcoin. So you're kind of like robbing your shareholders to buy more crypto. Think about that for a second. So why can that be a negative thing? Well, once the shareholders start to realize, okay, that they're getting quote unquote robbed because you're diluting share, or you're actually doing convertible debt, when your shareholders no longer want to get diluted, okay, or watch other people in convertible debt get paid in dividends and stuff, they're going to bail the stock. Okay, this thing is doomed no matter what anybody says. I don't give a damn how many research papers come out. Okay, you have to understand, anybody writing this stuff, okay, there's a reason for it. Okay, nobody sits there and writes articles, that's not being paid by somebody to do them. So I wouldn't trust any of that crap for a second. It's so transparent. Okay, this is the most transparent. Like, they'll probably, after this company does explode, which it will eventually, okay, they'll probably change some of the laws, and they should, and some of the securities laws, to stop this and prevent this from happening again. Okay, I don't have any, okay, there's not an inkling of me that would ever buy a share like this, okay, or even believe in the entire strategy. Just not going to happen. But in the reality of some of the moves in here, well, today is actually pretty good. It's been dropping quite considerably, and you're starting to see, okay, strategy diverge to some extent from some of the crypto product itself. We'll see more of that in the near future. But I'm just again, I don't care whether you believe in MicroStrategy or not, or Michael Saylor. My point is, though, you're not going to be able to control this market, because the reality lies in the fact that, look, if the S&P sell off, okay, there's some really big positions at some large firms now. So large firms, we're talking like the Black Rocks and so forth, and they're carrying these positions that if there's redemptions, they're going to have to get out, and it will sell off. Okay, and that has nothing to do with what anybody is doing and Michael Saylor is doing and trying to buy a bit more Bitcoins. There is nothing that will stop, okay, a sell-off across asset prices. I've seen it 1,000 times before. I've been told this stock can't possibly go down, okay, and I've seen it all. So it's something that is going to be unfortunate, because I think people are really getting roped heavily into that. Even if there is viability, okay, to what strategy is actually doing, the way they're going about it is not clean. Okay, it's promotion after promotion. To me, it looks like another like Super Micro. Okay, Super Micro, I've said this time and again, this thing is like literally a scam. And now people realize, when a couple people got like taken away in handcuffs, like how this thing didn't get delisted. Of course, one of the founders is actually found guilty of smuggling, okay, billions of dollars, okay, but it was isolated, right? It was an isolated incident. What people haven't figured out, it's an isolated incident that actually helped the bottom line, though, of Super Micro. They're all in on it, okay? We'll see, okay? We'll see. When they turn state's evidence and start to throw everybody under the bus in Super Micro, here's one that, okay, I wouldn't buy it. I wouldn't get short either, but I'm surprised the volatility in there is not higher. Okay, enough said with that one. It's good. It's all good. Okay. S&P's right now up a staggering 15 points. We're not doing that much. Okay. That doesn't look good. All right. Russell. Okay. For the most part, unchanged. Here we go. Pawn crowd. It's actually kind of nice to bring this one up. So I want to start with why do I screw this up every single time? It's Palo Alto Networks, ya monkey. Okay, talking to myself. Palo Alto Networks. there's a big jump in share price today. And here's another one where I thought was quite amusing. Palo Alto Networks has been getting annihilated lately. If you actually look at a 3-year, okay, and I promise you, people internally at the company are looking at the same thing that we are, okay? They're like, ah, crap. This, by the way, this is the decisive factor. Oh, crap. If we break under 140, we're so screwed. So what did Palo Alto Networks do? You know, very often, okay, people look at like insider buying and selling, okay? And in this case, okay, there was a large insider buy in Palo Alto Networks today. I don't even know where I was going to actually show you the, okay, some of the news in here, but there was a very large insider buy in Palo Alto Networks. The reason being in here, I don't even know where the hell it is. Okay. The reason being, probably because they didn't want the stock to crack under 140. Okay. Yeah, the people involved in the company, I'm sure they believe in the company. Yay. Okay. But here's one where, careful with that thought. Again, this one goes right in line with what I was talking about in strategy. That is, okay, a couple of insiders are not going to save the stock. If it's going under 140, it's going under 140. Watch this one in the next couple of days. I think it's going to be interesting. Okay, I really do think it's going to be interesting. Right in the same category, CrowdStrike. Okay, CrowdStrike also has a big bid under it. CrowdStrike and Palo Alto Networks came under heavy volatility because of a new version of Claude. For those of you that have no idea what a Claude is, Anthropic, which is of course an AI company, they're considering going public. Anthropic accidentally listed an internal research paper on a public site talking about a model that they had built. And that model is a magnitude larger and more effective, okay, at cracking pretty much any security. So CrowdStrike and Palo Alto Networks took a pretty big hit on that one. Okay, onward and upward. All right, we're seeing a decent bounce in here. But again, Palo Alto Networks was an insider buy. Okay. Jeff, like you've never seen that one before, right? They're like, get out there and buy that stock. Like, so you guys know, I have literally been to board meetings where they're like, you get your ass out there and you buy my stock. That is the CEO and chairman talking to the directors, okay, at a meeting. So I will not name the company to definitely protect the guilty, but that's kind of how some board meetings go. You know, get out there, support the stock, kicking them over there, do it. Holy crap, Micron's just getting killed. There's no saving this. This was up this morning a lot too. Okay, Micron, that's happening. That is happening in there. And then the last one was SanDisk. Of course, I can't type it in. Okay, SanDisk also reverting back down. Okay, that's not going to help anybody, down another 2%. All right, we'll sit tight with some of the positions that I'm in. The intraday trade and the IWM, okay, looks like crap right now, but the day is young and anything is plausible. Jeff, what do you got going today?
What's the last installment of part 5 of bridging the gap between economic cycles and market cycles? So I'll talk about a couple more today. Help people better time and not next time not to buy at the 7,000 level. That's what it's all about.
What, the 7,000? Come on, man. It was a big round level. Could have happened. Could have happened. You know, I'm pretty uncertain today as to what this is going to look like.
Oh,
Like, again, I don't think it's a sell.
you are.
No, it's $110 expected move.
Yeah.
No, it's like the bonds, they haven't budged. Like the bonds have not budged. In fact, the bonds are right back to highs. It just tells me that the stability is there today for the big rip your face off rally. The financials are basically at highs of session. It's just tech. Nobody seems to love tech. But I'm surprised that those that are short are not going after the rip your face off rally, and they're just not. Like it's quite surprising. Jeff, I got to turn it over to you. I'll be here all day. I'll be here all day, every day. If you guys need anything throughout the course of the day, well, again, we're here, and if markets get crazy, I'll definitely hop on. With that, Jeff, sir, it is all yours. You look like it's winter there. What the hell? I just looking
It
at
is.
your hoodie.
It's getting warmer, but no, I just got lazy and I just left the sweatshirt on.
Okay, all right. It just it's Is it winter? Is it snowing on you still? Tell me.
No, it just changed. Some days it's 60, some days it's 20. I don't know. Pick your